Welcome back. Now that you have some understanding of stock exchanges, let's try and understand how a typical transaction gets completed on the stock exchange. There are three phases in a secondary market transaction. The first phase is trading. This is where the actual buying and selling of securities happen. Exchanges take various buy and sell orders from different people on their electronic order matching system. Then they match the various buy and sell orders to execute trades. So for example, if these are the various buy orders on a security and these are the various sell orders, then the matching system tries to see if there is a match between a buy and a sell order at a particular price, and if so, fill both the orders. Through this process, the trade is executed speedily, efficiently, and anonymously. All investors route their order through brokerages. Brokerages collect various orders from investors and route it to the exchanges. As a retail investor, the intermediary you will deal with directly is the broker, and the broker in turn interacts with the exchange on your behalf. The next phase is clearing. Once two orders match, a trade is executed. This trade has to go through what is called a clearing process. Clearing process is the process of identifying which securities and in what quantity is owed to which buyer. The clearing process also identifies what amount of payment is owed to the seller for this transaction. So if an investor A buys 100 shares of company X at $10 each from investor B, the clearinghouse does the math and determines that investor A is owed 100 shares while investor B is owed $1,000. In case the buyer or the seller perform multiple transactions, then the clearinghouse identifies all the securities owed to or by them and also all the payments owed to or by them. This clearing process is managed by an independent entity known as the clearinghouse. Once the clearing process is complete, the next phase is settlement. On completion of the clearing process, it becomes clear what security is owed to which investor and what payment is owed to or by each investor. The next step is to fulfill these obligations. The settlement process is the process where securities and payments are made to respective investors. Once the settlement process is complete, the buyers receive their security and the sellers receive their payments. Various intermediaries play different roles in a security market transaction. The first intermediary is the trading member. Trading members are your typical stockbrokers and their affiliates, also known as sub-brokers. Every investor is required to route their transaction through one of the trading members. A broker can become a member of the exchange only on fulfilling certain minimum requirements for capital, qualification, and net worth, among other requirements. The exchange closely monitors all the members, and all members are required to fulfill their obligation to their clients. The second intermediary is clearinghouse. Clearinghouse conducts the clearing process. They are independent entities who act as counterparty for all trades executed on the exchange. This means buyers transfer all the funds of the transaction to the clearinghouse and sellers deliver all the securities to them. This of course happens through the broker. Clearinghouse employ risk management systems to reduce the settlement risk between parties. Another intermediary involved in transactions is the depository and depository participant. Like you keep your money with a bank, you are required to keep all your securities with a depository. A depository maintains a record of all the securities you own. Hence, depositories also facilitate the exchange of securities. only the securities that are held in electronic or dematerialized forms may be traded in the secondary market. When the securities are issued through the primary market for the first time, the issuer deposits the security with the centralized depository. From there on, the record of which owner owns which security and in what quantity is maintained in the centralized depository. Depositories appoint depository participants who act as intermediary between the depository and the investors. So every investor is required to hold a demat account with a depository participant. The settlement of securities is done in this demat account. On completion of a trade, the depository participant then informs the centralized depository about change of ownership. The payments for respective trades are settled through pre-identified clearing banks. Practically, your broker manages the nitty-gritties of this process for you. Another intermediary that is mostly employed by institutional investors is the custodian. A custodian is a bank which holds funds and securities on behalf of large institutional investors like mutual funds and insurance companies. Custodians settle the secondary market trades and may also act as clearing members and clearing banks for the institution in order to manage the settlement of both securities and funds. Now that we have developed some understanding about stock exchanges, in the next video we are going to understand what are securities and what are the various types of securities that get traded on stock exchanges.